I think the inflation policy that's going to be discussed is very interesting, but I don't think it's germane to the moment. I mean, I think the Fed has made it very clear that they will take whatever measures are necessary to ensure the continued flow of credit throughout the economy, and because they know that they're never going to achieve full employment without doing it. So, I mean, I don't want to kind of downplay this Jackson Hole event. I mean, I'm going to be listening like everyone, but the Fed made it very clear back in March that this whatever it takes monetary policy is here to stay until we get some kind of normalization in the economy, and I think that's what's important here.
With you, they already allow an overshoot. They've already implicitly said that without having some big banner that says overshoot allowed to 2.5%. But I mean, I would argue that the markets would throw a massive wobbly if they don't get what they want from this, if they don't get explicit saying, yeah, we're going to give you a 1.5, 2.5 range, what have you now. Would you agree that the markets are on tenterhooks about this, whether that's rational or not?
I don't know if I would agree that they're on tenterhooks about that particular. I mean, I would agree that if something is said that is viewed as a disappointment by the market in terms of the commitment to the whatever it takes monetary policy, which is obviously deviated from traditional open market operations to extending credit specifically to targeted areas of the economy to ensure credit markets are functioning. I think that market participants want clarity that is going to continue for as long as necessary. So if there is some negative read through on that front, then I would be concerned. But the inflation policy, I agree with your earlier statement. I think this has been known for a while. I think implicitly they've already been doing it. So I don't think this is going to be as big of an event as a lot of people think. I could be wrong, but that's just my take.
No, fair enough. Okay, well, let's ask you the next obvious question. If this isn't the big event, well, what's the big thing, or what's the most important thing for you at the moment when you're making your decisions, looking at these markets?
Yeah, I mean, we've been very bullish since March. Our general view has been not to downplay this 2020 in general has just been a tumultuous year on so many fronts. The political landscape, the virus, all the injustice we've seen, the racial injustice that's coming to light. And our general view specifically to the virus has been that we will get through this, that they will be curbed through a vaccine, better treatments, more rapid testing, better health policies, some combination of all the above. And when we do get there, we're gonna see normalization in the economy. And so you want to position yourself for that, and you want to understand which assets are being mispriced in the moment. And I think the way we viewed that is kind of the narratives that have come out of 2020, the way that people are framing what's happened, the way that they're looking at the world, and how that's creating mispricing. And I think it's been a belief that we're just never going to get out of this. And you see it, days in the market like yesterday in the U.S. where the overall market is up a bunch, and it's driven by these technology names, which are fantastic companies with amazing business models, but they're on the pricier end of the spectrum. So we've been positioning, trying to find good, solid companies, smaller cap space smaller cap companies that are more cyclical in nature, that we think are trading at big discounts to intrinsic value, that have clean balance sheets, that aren't facing permanent disruption, that will benefit from an eventual normalization in the economy. And so that's kind of how we've been playing it, and that's how we continue to play.